How's it going, guys? I wanted to check in on Bitcoin right now, and the crypto markets in general, because there have been quite a few interesting developments, beginning with the most obvious, which is the fact that Bitcoin has surpassed 55K, at least temporarily, for the first time in just about 5 months. Early to mid-May was the last time we were there, and at that time, there was a big dump all the way down to below 50K and around 45K. Um, and that price floor kind of occurred for about 2 months before recovery occurred. This time around, things of course look different. We can't expect that every time it hits a certain uh, price price tier, it's just going to follow the same pattern, especially when the crowd expects that. As we've talked about in many of our previous calls, when the crowd overwhelmingly expects one result in the markets, usually the opposite occurs. And that's what I'm going to be going over here today a little bit. Beginning with our social trends page on app.santiment.net. I'm highlighting the tab that will allow you to get to the page that we're looking at right now. Simply hover over charts and go to social trends, and you'll be on this page that will present you with 10 words that are seeing the largest percentage rise compared to their normal resting rate. So for you mathematicians out there, we'd call it a significant peak in standard deviation versus its median. And right now, we can see there are still remnants of Shiba being discussed at very high rates because the early part of the week has been dominated by the asset that most consider to be a meme coin, just surging. Had something like a 60%, 65% gain even in about a 24-hour period at one point yesterday. And we can also see alts trending, which is interesting because it's trending for the wrong reason. Alts are essentially falling behind Bitcoin at the moment in terms of percent gains, which is kind of a change from the majority of the year where uh, Bitcoin has kind of been stable, but well, of course, Bitcoin still made an all-time high in April, but relatively speaking, altcoins were the ones that were surging and um, really being the most lucrative kinds of assets you can be in. But because we're in a reversal right now and Bitcoin is getting a lot of the price and volume dominance, altcoins are being talked about negatively, while Bitcoin here at number 4 is being talked about positively because of the fact that it is seeing this surge going above 55K, as I said, for the first time since May. And generally speaking, when we see assets hit the top three or even just the top 10 in general for reasons related to price rises, that's generally the sign of at least a temporary stoppage point in that rally, sometimes even a reversal, which people need to be concerned about. So obviously, Shiba has not come back down to earth, I should say, but it's at least evened out at the time of this recording. And with both its cash tag as well as its full name being in the 1 and 3 positions respectively, that's going to be a sign that the crowd has discovered officially that this asset is on a major roll and a lot of FOMO is occurring, people getting into it. Like I said, I think it's mostly remnants from yesterday, but regardless, these two are still dominant words compared to the normal frequency of mentions of Shiba. But going back to Bitcoin, which I'll do for the rest of this call, Bitcoin is seeing a massive spike in price and volume dominance. And because of that, it is trending right now. And obviously, Bitcoin is the most discussed asset in cryptocurrency. So anytime it actually makes this list, that means there's a pretty serious uptick in discussion for it to deviate that much above its normal rate. Um, we'll look over here at, let's see, I'm going to start with, yeah, this chart here, which shows the overall mentions of Bitcoin and the word Bitcoin, I should say BTC and the word Bitcoin here in blue. These are just the overall social volume mentions. Each bar represents 3 hours, and we're looking at a 3 month time frame right here. So if I were to just highlight this, you can see some peaks in blue that mostly correlate with extreme price movements that have just happened, more so moving upward than downward, but both are still relevant. And what I think is even more accurate is looking at social dominance, which is essentially the same as mentions, but it is dividing the mentions of Bitcoin versus other top 100 assets in crypto. This basically eliminates the variable of time, and whether it's uh, something like midnight UTC or 10 a.m. UTC or 9 p.m. UTC. These are all very different times where sometimes crypto is not discussed overall as much as it is during its prime hours. But this looks through that and allows you to see the percentage of discussions related only to Bitcoin versus everything else being discussed at that time. So I like it a bit better. Some of our staff members actually prefer the other one. So both are definitely valuable. But for identifying potential tops, I like to look at these orange spikes, right? And what they're showing are usually occurrences where people are uh, getting a bit overhyped related to Bitcoin. And when that happens, there's usually at least a minor correction until the hype goes away, because the crowd, when they believe too unanimously about the future price direction of an asset, usually the opposite occurs. And so when these orange spikes are occurring, like here, this is usually the crowd unanimously deciding that this rise that started around 47K and got up to 52.7K at the time in early September was going to continue. So this dominance spike meant that a lot of the focus was shifting away from other assets, and everyone was saying, wait, maybe we should just only look at Bitcoin right now. And when they did, literally on the candle spike, that's when the top occurred. And we retraced huge here from 52.7 all the way down to around 46.7 or so before things got a little stabilized. Dominance was then kind of shifted to what's going on with Bitcoin, why did it crash, to fear, to complacency down here when there just wasn't as much discussion overall. And this cycle generally just rinses and repeats, and you'll also see the spikes on the downside too. This is a capitulation spike where people are saying, well, I guess Bitcoin is just going to keep on going down, so I'm going to sell it all. And as soon as that kind of discussion happens, and of course I'm generalizing, and I can't just say that everyone here is saying that at the time, but generally when spikes happen, it's happening at the uh, point, at the breaking point or the euphoria point for traders. And when these spikes happen, it's usually going to indicate a at least temporary reversal of price, and that's exactly what happened here. This one was kind of a future one that actually many people were able to benefit from for about a day before another crash, and then dominance ends up going back down. There's this point right here, which is like a sign of disinterest, and then boom, we have this huge spike until just today, where we're currently on a spike that is on the tail end of euphoria and a massive, massive price rise. And because of this price rise, people are hyped. They're like, I want to get back into Bitcoin. I guess it's going straight to an all-time high. And at least at the time of this recording, we're seeing a very, very minor retrace. Now it could very well be a super minor and we keep on going up, but usually until this dominant spike goes down, the upside will be limited because there is so much crowd euphoria and traders who usually don't make profitable decisions making the decision that they want to get into Bitcoin. Um, so that's just a look at kind of how to analyze when social dominance is impacting the future price movement of an asset itself. But we can also look at other words. Um, it's not going to be relevant for what's happening currently, but I want to point out that there's also things like buying the dip or buying dips. When these types of things are mentioned, usually the opposite expectation happens. So when a really obvious buy the dip opportunity happens for the crowd, it's almost a self-fulfilling prophecy where that isn't yet the dip to buy until the crowd becomes disinterested in buying the dip again, and that's the actual opportunity to buy the dip, if that makes sense. A few pieces of evidence here. We can look going back to September 7th, just about a month ago. Everyone said, all right, it dipped to 46.7K. Guess it's time to buy the dip. There was a very minor one, which will often occur, followed by further downside. Once people weren't talking about buying the dip, that's when the actual dip buy opportunity occurred. We came back up here, then we had another dip and another huge spike, and everyone was saying, all right, it's time to buy the dip. And then we continued on downward um, until we eventually saw kind of a bit of capitulation. Boom, another dip up here. Everyone says it's time to buy. Further downside until people ignore it again. And then we eventually move up, right? So that's buying the dip, which is not in play at the moment, right? Because we're seeing the opposite of a dip, we're seeing a spike. But now we can look at the word short. Very simply put, this is the frequency of the people discussing shorting the markets. Obviously, there's going to be some noise in there with some word that has multiple meanings like short, but overall in crypto related platforms, which is what this is tracking on Twitter, Discord, Telegram, uh, Reddit, and pro traders chats, it's mostly going to be related to shorting the markets. So this is still a viable study to look at. And what we're seeing is multiple spikes right here, where the crowd was saying it's time to short, the price should not be as high as it is, or there's, they could easily be laughing and kind of making fun of the people who shorted right here too. That's also a viable likelihood. But either way, what ended up happening is the price continued rising as shorts were mentioned. You can even look back here in July. We had a similar thing where people were saying, uh, we're mentioning short at a very high degree. And we kind of eventually, after a little bit of noise, continued climbing upwards. So, a long story short, when you look at social trends like this related to price behavior and what the crowd seems to be thinking is going to happen next, you can gain a lot of insight as to what not to do. And this is by no means a perfect measurement of any kind, but if you like to play the odds, which is a lot of what trading is, it's making educated guesses based on support levels, resistance levels in TA, and of course on-chain and social metrics here on Santiment. You're going to try to find um, opportunities to um, see where metrics are in your favor, even if it's not a 100% certainty. And that's what these types of analyses are going to help with, is giving you the best educated guess as to when to be a market contrarian and avoid falling into what the rest of the crypto sphere is expecting at any given moment. Last thing before we close out is our graphs.santiment.net/social platform, which we've gone over many times on our This Week in Crypto calls. Wanted to show it here just to give an update on where we are. For context, what we're looking at is the rate of positive commentary and the rate of negative commentary for Bitcoin. This is over the last 2 years, so we're looking at a pretty wide range here. But if we look at just recently, we can see that there is this big uptick in positive commentary. And it's relatively speaking, looking back toward 2019 and 2020, we didn't see nearly these kind of rates where, at least in the current candle, we're looking at 900 to 930 mentions in a given period. That's not usual. We usually see us a little more down here on the positive side, and it's been pretty positive, while negative commentary really hasn't changed too much over the past 2 years. So this is widening the gap between euphoric calls and bearish, fearful calls. And what we do with this is we blend it together and we combine it with these social mentions that we just talked about here, just the overall mentions of BTC or Bitcoin. and we multiply the ratio of positive versus negative commentary together, multiply that by the social volume, and this is the outcome that we have measuring the deviation versus the norm, right? And so when things are super high like this, that means that people are discussing it more and there's a higher rate of positive commentary versus negative. Obviously, this was coming just about a month after the all-time high. So any dips at the time were kind of just shrugged off by the crowd because everyone ended up just being scooped up and then a higher high would be made. So people thought this would be no different. And the lower we went, the more people just said, oh, no problem, just buy the dip, buy the dip. And with that crowd expectation came further downside. Um, and generally speaking, when you see these extremes, these standard deviations that are like 1.5, or this one even got up to about 2.4 above the norm, that's an extreme euphoric spike that is something you want to watch out for when we're getting to that point. Really, the last time we saw spikes like that was back here in April, where we did have about a 10% movement after it happened, followed by a lot of flatness, right? And this was like kind of the complacency period where a lot of people were just getting bored of crypto. But also look at like the negative dip that occurred after this May slide happened. People were getting very, very fearful and kind of just giving up on crypto at this moment. And once that capitulation forms, that's generally when the eventual bottom occurs. And as soon as it did, boom, we we just skyrocket up to above 50K again, fell back below, and now here we are back above 50K once again by a pretty wide margin at this moment. And at this time, we're back in positive range, but as I said, the extremes are really what you want to pay attention to. If it starts getting like above one from the standard deviation or below one from the standard deviation, those would be considered extremes where it is a pretty strong likelihood that either a correction or a price bounce, depending on what side of the fence the price is on at the time, will occur. And that's why we love weighted social sentiment, and it lends well to the social trends analysis that we were just looking at here on Sandbase. So hopefully this is helpful, guys. Feel free to drop us some comments and ask for clarification. Let us know what you think of these tools. If there are improvement ideas you have, fire away. We are very receptive to the opinions of our audience, and we are here to grow and serve you guys with helpful metrics that will make you a better trader. Thank you all. Talk soon.